The income tax is a direct tax. What is a direct tax? Direct tax, the tax incidence falls on the same person. So the direct tax is a tax. The tax incidence falls on the same person. It is a major source of revenue for the government. The Indian government need fund. So one of the way of collecting the revenue is the collection of income tax from the people. Every person is liable to pay tax, income tax on his income, that is the income earned by the person beyond a certain limit which is accepted by the government. He is liable to pay the income tax. Originally, the income tax was introduced by Sir James Wilson. Sir James Wilson in the year 1860, 1860. Now, we talk about the history of the income tax. In 1860, the income tax was introduced by Sir James Wilson. At the time, that is the World War, at the time there was a World War. The government needs finance for various purposes. For that purpose, the income tax was introduced and collect the money in the form of tax from the people and spend it for defense purposes. So, this was introduced in India also in the year 1886. In the year 1986, 1886. An Indian income tax was introduced, and the act was amended from time to time. In the year 1918, a new income tax was introduced by the government, and it was amended in the year 1922. The Income Tax Act 1922 was very complex, and hence the government decided to enact a new income tax act. Accordingly, in 1961, a new income tax act was passed, and the new income tax act came into force on 1/4/1962. The Income Tax Act 1961 was introduced on 1st April 1962. And to understand the income tax, there are additional acts which have to be studied along with this Income Tax Act 1961. Income Tax Rules 1962, Income Tax Rules 1962, then circulars and notification issued by the Central Board of Direct Taxes (CBDT), Finance Act. In the Finance Act, the rates of taxes are announced every year, and court decisions. All these things have to be studied along with the Income Tax Act. So the rules, Income Tax Rules 1962, Finance Act, government notifications and circulars, and court decisions. So these all affect the provisions of the income tax. The next topic is the definitions, the words or terms which are defined in the Income Tax Act 1961. The first definition is the assessment year. Assessment year is defined in section 2, subsection 9. of the Income Tax Act 1961. It means, that is, assessment year means a period of 12 months starting from 1st April and ending on 31st March of the next year. 1st April ஆரம்பிச்சு 31st மார்ச்சில் முடியக்கூடிய 12 வருஷங்கள் கொண்ட அடுத்த ஆண்டு, next year. It is otherwise called a tax paying year. It is otherwise called tax paying year. The second definition is the previous year. The previous year is a financial year immediately preceding the assessment year. Previous year is a financial year immediately preceding the assessment year. What is a financial year? Financial year means a year starts from 1st April and ending on 31st March. That is a financial year. Then previous year is a financial year immediately preceding, அதற்கு முன்னாடி, எதற்கு முன்னாடி? assessment year. assessment yearக்கு முன்னாடி. So it is an income earning year. It is an income earning year. Section 3 of the Income Tax Act defines this previous year. So we study what is the assessment year, what is the previous year. The assessment year means a period of 12 months starting from 1st April and ending on 31st March of the next year. The previous year is a financial year immediately preceding the assessment year. So now we combine the two terms to understand the meaning, their meaning clearly. அதாவது இந்த ரெண்டு டெஃபினிஷனையும் நம்ம சேர்த்து பார்த்தோம்னா வாட் இஸ் த ப்ரீவியஸ் இயர், வாட் இஸ் த அசஸ்மெண்ட் இயர் அப்படிங்கிறது இப்போ ஈஸியாக புரிஞ்சிடும். அசஸ்மெண்ட் இயர் எதுவோ அதுக்கு முந்தின இயர், முந்தி வரக்கூடிய இயர் வந்து ப்ரீவியஸ் இயர். அப்போ ப்ரீவியஸ் இயருக்கு அடுத்த இயர் assessment year. அதுதான் அந்த கான்செப்ட். ஸோ அசஸ்மெண்ட் இயரும் ப்ரீவியஸ் இயரும், ஃபார் எக்ஸாம்பிள் நம்ம இப்போ நடக்கக்கூடிய கரண்ட் இயர் எடுத்துக்கிட்டோம்னா, கரண்ட் இயர் என்னது? 2020 அப்படின்னு இன்கம் டேக்ஸில் சொன்னோம்னா 2020 இட் ஸ்டார்ட்ஸ் ஃப்ரம் ஏப்ரல் 2020, 1st April 2020 and ending on 31st March 2021. So it contains 12 months. So this is the current year. This is called the previous year. The income is earned in the previous year when the tax is to be paid. The tax is to be paid in the next year. What is the next year? April 2021 to March 2022. About what is the assessment year? 2021-22 is the assessment year. So to conclude, for the previous year 2020-21, the assessment year is 2021-22. So likewise we can take many examples. For the previous year 2019-20, the assessment year is 2021. For the previous year 2018-19, the previous year is 1921. In that like way, we can write the assessment year is 2019-20. Then the previous year is 2018-19. So now we clearly understand what is the assessment year and what is the previous year. Assessment year is the period starting from 1st April and ending on 31st March of the next year. The previous year is a financial year immediately preceding the assessment year. Here a question arises whether all the persons has to be maintained the uniform previous year, that is the financial year 1st April to 31st March. Yes, all the persons has to maintain the uniform previous year starts from 1st April and ending on 31st March. Before the assessment year 1989-90, before the assessment year 1989-90, section 3 of the Income Tax Act explains the additional 2 points. One is the uniform previous year. Another one is a previous year can be less than 12 months. The 2 points. The section explains whether it is possible. First, the question arises whether all the assessees has to maintain the uniform previous year, that is a financial year, that is first April to 31st March. Yes, all the assessees has to maintain the uniform previous year from the assessment year 1989-90. From the assessment year 1989-90. The second question, can a previous year be less than 12 months? Because the definition of the previous year, specifies that the previous year is a financial year. What is the financial year? It starts from 1st April to 31st March. Then it contains 12 months. In the definition of the assessment year, the term specifically, the definition specifically notes that a period of 12 months starting from 1st April. Now the question arises, the previous year can be less than 12 months. Yes, it is possible. In case of the newly started business, if the business is started on the particular date after the 1st April, the previous year can be less than 12 months, or the source of income is a new source, then the assessee can maintain the previous year, which case less than 6 months. Suppose a person starts a business on 1st October 2019. 1st October 2019. What is the previous year? The previous year starts from 1st October 2019 and ending on the next following March 31st. Next following March 31st. So the previous year starts from 1st October 2019 and ending on 31st March 2020. What is the previous year? 2019-20 is the previous year and assessment year is 2020-21 is the assessment year, but the previous year is less than 6 months. So in case of new business, the previous year starts from the date of commencement of business and ending on the immediately following March 31st. This is the explanation added by section 3. Now, a question arises, another question. The income of the previous year is taxed in the same year. So far we have studied the income earned in the previous year, tax is paid in the assessment year. So previous year is a preceding year and assessment year is next year. So their general rule is that the income earned in the previous year is liable to be taxed in the next year, that is assessment year. This is a general rule. For the income earned in the previous year, tax is to be paid in the assessment year is a general rule. But there are certain exceptions. There are certain exceptions to this general rule. There are certain exceptions to the rule that the income of the previous year is taxed in the assessment year. That is, the previous year and the assessment year will be the same. What are the cases? The first one is the income of non-resident shipping business. Income of non-resident shipping business. Income earned by a non-resident ship. Income from a non-resident ship earns an income in an Indian port. Indian port, a ship is landing and earning freight income in India. If the ship is left or it is out of it go out of India, then it will again come into India after 6 or 8 or 10 years. The assessment year is the next year. Then we cannot collect the income tax from the earning of the ship. In this case, after earning the income, the ship has to file the income tax return and pay the tax in the year itself. The second point, income of a person leaving India either permanently or for a long time. Suppose a person leaving India for the purpose of employment, he has to pay the tax on the date when he left India. Then, third point is the income of the association formed for the short duration. That is called a joint venture. A joint venture was entered into construction of some government building, and the building was completed within the year, and the joint venture was dissolved. In that case, the income of the joint venture has to be calculated in the year itself, and the necessary tax is to be paid before dissolving this joint venture. Income of, fourth point, income of a person trying to avoid the tax by transferring these assets. This is called a benami transaction. If a person transfers his asset with a view to evade the tax, suppose a person transfers his assets with a view to avoid the income, a view to avoid the income. In that case, it is called a benami transaction. The assets are in the name of the person, and he transferred the income without transferring the asset, or transfer the asset with a view to avoid the tax. The fifth point is income of discontinued business. The income of discontinued business will be taxed in the year in which such a business or profession is discontinued. The next definition is a person. The person who is a person is not defined in the Income Tax Act, but section 2, subsection 31 specifies who are the persons. The section starts with the person includes. The person includes 1. An individual. 2. A Hindu undivided family. 3. A company. 4. A partnership firm. 5. An association of persons or body of individuals. And 6. A local authority. And 7. Artificial judicial person. So, these 7